I'm curious because we saw Jay Powell signal a Fed pivot last week, away from rate hikes and, of course, towards a rate cut. And markets really took off on that at the end of last week, and they continued to in equities today. So, of course, now you see the central bank officials walking that stance back a bit. What do you think will be the main communication challenge for the BOJ in a couple of hours?
I think if they were to change the rate today, the challenge is to how to explain and communicate why the decision was that. And I expect that would be very difficult, so they wouldn't change the rate today. But I think they would signal that more firmly that they will be ready to take the first step for normalization in January or April. They have said that they want to see the results of the wage hike spring offensive, which would take place from February to May. But we see the major results in March. So the natural guess is that in April, BOJ would be ready to change the rate. But earlier, the second scenario is that they could change it in January if the inflation expectation, as the survey of the policy board member, if the inflation expectation would be raised significantly in January outlook document, they could change it in January. I think the market went a little bit wild when the Governor Ueda gave the testimony in the upper house saying that there'll be a challenging situation from this end of the year to early next year. And the market took it as there is a possibility of changing the rate today because this is the end of the year. But probably that was not what Governor Ueda meant.
So we're not going to get a rate change at this meeting, but potentially in January, potentially in April. Just talk to us about the sort of implications of that. Of course, it's been since 2007 since we've seen a move from the BOJ. What has this journey been like, and what does it signal about where Japan is going from here?
Yeah, so Japan is behind, as you see in the graph, that in the step of normalization, because the Japanese economy was late in recovery from the COVID recession, and also a inflation rate was much lower than the U.S. and Europe. The peak was 4%, and as opposed to 8 or 10 in the U.S. and U.K. But the Japanese CPI inflation rate is now up to stay at above 3 to 4%, depending on which measure you take, and that has been there for a year. So combining that with the inflation expectation, how the inflation rate would hold above 2 is a key variable to make the judgment. That's my view.